Hello, my name is Steve Bigelow with the Candlestick Forum. There are some very good chart patterns that are setting up right now because we know the direction of the market. Last week, we saw that there was a potential of a uh, bubble breakout with a gap up through the 50. However, we knew that was negated immediately because logic says if you see a candlestick chart where they're showing that they're opening at the lower end or below the previous day's open, the bulls have lost strength. The bears are now taking control. That becomes an immediate alert that any long positions are looking a little bit soggy. You close out and you start looking for short positions. Now, the confirmation of that has been they've closed below the Dow has closed below the T line. It's shown that it's failed at the 50. Stochastics are heading down, and we're still heading in a downtrend. Obviously, this is all the worry of the Ukraine situation, number one, and then you've still got inflation out there as a overhanging fear. So anytime you see a gap down below the previous day's open, that's telling you there's been a dramatic change of investor sentiment. Be ready to move immediately. Same scenario on the NASDAQ. When it gapped down below that open, and then on Friday created a bearish flutter kicker signal, that was a pretty good piece of evidence that the bears had taken control. Today it did kind of a doji day. Stochastic still heading down. So with the doji day, you've got a lot more clarity as far as what's going on in investor sentiment. If they open this lower tomorrow, you've got a bearish flutter kicker signal forming a bearish doji sandwich. Strong implication there's more downside. If they open up positive, at least they're not selling it off hard. You can now at least assume the downtrend is not going to be very strong. It's probably in a sideways mode. But knowing that the movement of the market is heading down, this allows us to identify the chart patterns that are producing the strongest probabilities of a downside move. You can see in Moderna, there's a bearish J-hook pattern, starting with a little best friend signal, a doji gap down, producing a lot more forceful prospects that wave 3, wave 1, wave 2, wave 3 now in progress. That was our reason for shorting CCI last week. There's your J-hook pattern. There's your close below the T line. There's your bearish best friend starting wave 3. And we're starting to see that in NVAX. Again, the combination of seeing a pattern setup, a bearish J-hook, and it being instigated by a bearish best friend, one of your strongest bearish signals, that just leads to that much more probabilities that any selling can be shorted here, looking for a wave 3 to the downside. So anytime we can use the chart patterns and the combination of candlestick signals, that allows us to use the 2+2 analysis where we're adding up all the probabilities of what we expect based upon a bearish flutter kicker and then potentially a bearish J-hook pattern. And today, ADI, we had recommended shorting it. We'd still recommended shorting it on weakness tomorrow because that would give you a bearish doji sandwich, implying that type of move, which would also illustrate that this support level is now not acting as support. The probabilities are extremely strong. You're moving down. Anytime you see a big reversal signal, we recommended going short on AFRM. We bought puts because of the big bearish engulfing signal and a close below the T line and the prospects of a bearish J-hook pattern. Friday's gap down was confirmation that this bearish signal was in progress. We still would remain short with the expectation they could be coming down to the bottom of the channel. We'd be looking to short BRKR based upon the big bearish engulfing signal, closed below the T line, and the obvious failure that everybody else was watching right here at the 50-day moving average, another likely bearish J-hook pattern setup. So anytime we can see a strong, forceful move at a moving average that everybody else is watching, like in Under Armour, there's your shooting star, bearish harami, failure of the 50, gap down, based probably on earnings, showing a lot of force to the downside. These signals and patterns are easy to identify, and once you learn them, now you're not at the whim of anything else. People's prognoses, the talking heads on the financial news stations, earnings expectations. These are very simple patterns that once you learn them and you know what goes on in human nature, they are all what I've written here in these 3 books. My suggestion is if you're starting out, read High Profit Candlestick Patterns. These are not written with a lot of fluff. As you can see in a lot of our YouTube dissertations, we don't have a lot of fluff there. We're right to the point, and that's the way I've been investing for years. Don't give me all the happy hoopla. Just tell me what the chart is telling me which way to go. That'll be it. We'll see you in the chat rooms.